I would suggest always approach investing from a risk-first perspective. What am I willing to risk on this trade, on this investment, to find out if it's going to work? Long-term investor, short-term trader, doesn't matter. You need to have that risk level set up before you get into the trade, before you get into the position. Say, okay, you know what? I'm going to give this $1. If it doesn't work out, that's okay. My name is Christopher Uhl. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. And I've been successfully trading since 2009. And this is where we save time, make money, and start winning with less risk together as a team. Now let's get into the lesson of the day. All right, so be sure to stick around to see how we rank this lesson out of 10. And of course, subscribe if you haven't done so already. So this video is called "The Stock Market is on the Verge of a Massive Movement." Double exclamation point emojis. Let's see what he has to say.
Now you have so much conflicting.
Oh, I am playing this at 1.5 speed. It's a 43-minute long video, so I don't want to be here all day.
Data coming out left and right. And these are very substantial things, right? For instance, the LA wildfires, everybody knows that it's been going on, right? It's been all covered all over the news for the past week and a half, right? $250 billion in damages they're talking about now, right? And that number is still not even final. Like, don't be surprised if it's $300 or $400 billion when it's all said and done, right? And a lot of people are asking questions like, what is this going to do to inflation, right? They're going to have to rebuild massively in certainly, I mean, it's going to take a while, right? So a lot of the rebuilding is going to happen in 2026, 2027, 2028. What's that going to do to inflation, right? Over the next several years? Who's going to pay out all this money? Like, people are still trying to figure out that. Like, I don't know, an insurance company's going to be able to fork over $300, $400 billion? Is the federal government going to have to do this, right? A lot of questions there.
So since you brought it up, I used to work at 2 different insurance companies, one being State Farm and one was Union Standard Insurance Company. And State Farm being, you know, consumer retail insurance, property and casualty, and then Union Standard being commercial lines. One thing that I learned working in commercial lines is that insurance companies have what's called reinsurance. So for example, if they're going to pay out $250 billion, the insurance companies already bought insurance from another insurance company to make sure that they can pay those claims. So it is absolutely, you know, a big a big Jenga tower, I guess you could say, of insurance companies insuring each other.
We have Trump getting in office literally in a few days from now. Literally, it's only a few days. The inauguration is coming here, right? And with that, I don't know if you guys have seen this, Musk, Bezos, Zuckerberg may sit together at the Trump inauguration. And it's just fascinating, right? Because it just happens to be 3 of my top 4 biggest positions: Meta, Tesla, and Amazon, right? Now, you also see something like this, where essentially investors week after week after week are getting more and more bearish leading up to the inauguration here. Look at this. You look at the week that ended December 18th, 31.
Oh, that's interesting. So this is the AAII sentiment. It's been a while since I've seen this, but I know a lot of people. In fact, one of the market wizards that I worked with, Jason Shapiro, this is something that he looks at a lot. So I wanted to jump into OVTLYR real quick and look on our sentiment for the S&P 500. And you can see it definitely peaked on the greed, right? This is their fear and greed index here. It peaked on the greed around December 11th. And since that point, it's gone from a decent, about halfway to the max of greed. And now we're definitely into the fear side, right? And the more fearful that people get, the more likely they are to sell. And then at some point, when all the sellers are gone, all that's left are buyers, right? So this is saying here, more bearish, more bearish, more bearish, more bearish, which does correlate to our same data as well. I'm curious, when was that shift? December. Oh, I'm sorry, I was reading it the opposite direction. Okay, so more bearish going upward. And then December 18th was their peak, which was about a week after our peak inside of OVTLYR here. Oh, no. So December 18th and our peak was when? December 11th. Yeah. So about a week. And then it's been getting more and more bearish. So definitely see that agreement there.
1% of investors were bearish on the market the next 6 months. Then that grew to 34.1%, then 34.2%, and in the latest week, 37.4%. So 4 straight weeks where investors are getting more bearish on the market and less bullish. Look at, they went from 40.7% were bullish on the market the next 6 months to 37.8, 35.4. Now the latest week, 34.7%. So now there's more investors based upon the AI investor sentiment, which they've been doing for decades and decades and decades, right? There's more investors bearish on the stock market for the next 6 months than are bullish. And that's a flip that we haven't seen in quite some time, right? Very, very fascinating. So I thought today, let's really focus on the market, where this market's headed, right? Because a rising tide lifts all boats, as they say, right? And if we're talking about the stock market gets its footing again.
As you've heard me say, a rising tide lifts all ship, and a falling tide shows who's swimming naked. So funny that he says the same thing.
starts going up, you see the Nasdaq moving up, S&P 500. It gets a lot easier for all our individual stocks to move up in that sort of environment. Versus, let's say, if the market can't catch its footing, right, and it falls down the hill, it's going to be hard to get much for gains in many of these stocks that a lot of us own, right? So I thought let's really dive in.
Right. And it's so true, right? To find a stock that has relative strength in a declining market is difficult. And in fact, we just talked about one in a previous video. You can go watch that one where he was looking at the cake stock, Cheesecake Factory stock, had actually really strong relative strength. And when a market is pulling down, it's like imagine climbing up a ladder and somebody's got an elastic band on you, right? That's the market pulling you down. You're trying to go up, but the harder and harder you go up, the harder and harder that band is going to get. But if a stock can have relative strength in a weak market, that's a really bullish sign if the market does turn around. That imagine that rubber band lets go, and then you just rocket ship from that point. So definitely something that could happen. Let's continue on
the market and where this market's headed in this video here today, right? Obviously, here on the channel, I focus mainly on individual stocks. And why do I do that? Because individual stocks is where your attention
What are these random pictures?
needs to be the majority of the time. The minority of the time you can focus on where the market's headed, but the majority of your time needs to be focused on individual stocks. That's why I always give preference to individual stock talk versus the markets, outside of maybe like a crashing market or something like that, where you just have crazy drama, okay? There's only one thing, and one thing I ask from you guys. The sign in my garage says it. I need you guys to smash that like button. I hope you can take 1 second out of your day to please do that for me. It's a huge favor. That's all I can ask from you guys. If you want to subscribe to the channel, you can certainly subscribe.
I mean, I can take a picture of my Tesla if you'd want, but whatever.
Here to the channel. We just hit a new all-time high subscribers in the history of the channel. I believe it's 812,000 subscribers here on the main channel. So I appreciate every single person for being here. Okay. Alrighty, guys. Where I want to start here, this might be surprising to some folks, but I actually want to start this video talking about Bitcoin. Yes, Bitcoin. And the reason I want to start today's video talking about Bitcoin is Bitcoin tells you a lot. It tells you a lot about where investors want to position, how they're thinking about the market moving forward. It tells you a whole story. It really does. And so even if you have no interest in owning Bitcoin, right? Perfectly fine. Always have Bitcoin on your watch list. Always keep an eye out because it's going to tell you an entire story here. For instance, right, if you look at Bitcoin's returns, since it became a more mature asset, which it really got into the mainstream financial landscape, I would say around 2018, 2019, right? And then just kind of got more and more mainstream over the years where now it seems like just everybody knows what Bitcoin is, right?
So I follow zero crypto. I don't pay attention to crypto whatsoever. So I don't have a lot to put on with this. I'm very curious to see what he has to say. In fact, I don't even know the exact ticker symbol to look up for Bitcoin. So like I know I have to put a slash because it's a crypto and not a stock. So slash BTC. Or I thought I had to put a slash. Oh no, it's a caret. BTC USD. BTC USD. Okay, there we go. So what I want to do is I want to see this side by side with the S&P. And we can look at this while he's talking as well.
Right. But you can understand Bitcoin is basically a call option and put option on the Nasdaq. Okay. It's been that way, and I see it being that way for quite some time to go here in the future. So essentially, whenever Bitcoin's going on a beast run, the Nasdaq's going on a beast run. But the difference is Bitcoin's going to be way more extreme to the upside. Now it also works on the downside. So let's say the Nasdaq goes down in a particular year, the Bitcoin's going to be way more extreme in terms of its downside risk versus a Nasdaq. So that's why I call it a call.
Okay. So what I want to do here is I want to do from like this August low on the Nasdaq. That was on August 6th. So I'll take the low of that candle up to, I'll do today, just so we're up to date. And then August 6th, right? Or August 5th. August 5th was back here, right there. So I'll again do the bottom of that candle up to today. Bitcoin's up 104%. Nasdaq is up 21%. Okay, I can see that. I can see that correlation there.
Option or put option based upon where the Nasdaq essentially is moving, right? And you can see this played out, right? So look at this. So Bitcoin down year 2018. Guess what? Nasdaq down year 2018, right? Bitcoin up 89% in 2019, right? I bet you the Nasdaq had a great year in 2019. Oh, did it ever? The Nasdaq was up 35% in 2019. In 2020, the Nasdaq was up 43%. I bet you it was a banger year for Bitcoin in 2020. Oh yeah, 302% gain for Bitcoin in 2020. Almost a 40% gain for Bitcoin in 2021. I bet you it was a good year for the Nasdaq in 2021. Oh yeah, it was 21% gain for the Nasdaq in 2021, right? 2022, Nasdaq got obliterated, down 33+%. I bet you Bitcoin got hammered. Oh, did it get hammered? 65% down. And then 100% plus gain in 2023 for Bitcoin and 100% plus gain in 2024. Oh, guess what? Nasdaq, banger year 2023, 43% gain, 2024, 28% gain, right? Bitcoin's going to tell you a lot. And so what's Bitcoin telling us recently? Bitcoin's telling us that when I say ultimately, I think investors want to take more risk. They do. If you look at the trend here very recently in regards to Bitcoin, it looks to me like people.
Okay, he brought up trends. Let's talk trends. Let's talk trends. That's my jam. So the way that we have built the outlier trend template is the 10 period moving average over the 20 period moving average, price over the 50 period moving average. Okay, when you got all three of those together, that's your outlier trend template, moving up or moving down, right? Bullish or bearish, doesn't matter either way. We have been in a very, very, very strong upward trend during that time. 10, 20, 50, your short, intermediate, and your long term all pointing in the same direction. And then you can see a sideways market since that point when they started to cross back over, right? Now, I've seen in the comments people saying, you don't really know when the trend is changing. Throw these on your chart, right? You're not going to get the very top. I'm not saying that. You're not going to get the very top. You're not going to get the very bottom, but you're going to figure out when the trend, right, when the overall movement is going in one direction or another. And this is a perfect example of a sideways trend, right? Where price is like bouncing around the 50 and the moving averages are bouncing around each other, right? Now, listen, I remember the very first time that I ever learned this, right? I was working with Steve Burns. You may know him, author of many, many investing books. And Steve was like, "Oh, Chris, it's super easy to follow the trend. Just throw well, actually, he said, is it trending up or down?" I said, "I don't know. How do I know?" And he goes, "Just add the moving averages on there. Is it above the moving averages or below the moving averages?" And as you can see on this chart right here, when a stock is above these moving averages, think of it this way. It's the average price over X number of days. So the black line is the middle point. That's my intermediate term. That's the average price over the last 20 days. If price is currently above the average price over the last 20 days, then the trend is up. Okay, does that make sense? Let me know in the chat if you have any questions on that. But to his point, since he wanted to talk about trends, we're in a sideways trend right now, coming off the back of a really strong upward trend. Now, this does remind me, let me find it. This does remind me of this right here, right? Very, very similar, right? You got this huge up move to a sideways move, huge upward to a sideways move. I'm not saying it's going to crash, but it does remind me of this particular market cycle part right here.
People are about ready to start taking risk on the market again, right? Because that's the story Bitcoin's telling us. Basically, over the past month, it's been telling us a story of like investors are uncertain, right? And very, very recently here, it flipped in a massive way, and now it looks like investors are ready to take risk once again, right?
I mean, if we're looking like really, really recent, true. The trend is starting to turn more bullish. Okay, I agree with that.
Now, additionally, I don't know if you guys follow me on the reaction channel, Jeremy Lefebvre Makes Money, right? But I did a video yesterday talking, at the beginning of the video, I talked about Fubo, AMD, and Cake, right? But then from there, I reacted to a few videos, which I pretty much always do on that channel, right? But one of those videos was Tom Lee. Tom Lee's making a call that Bitcoin's going to 200 to 250,000 this year, 2025. By the end of the year, you'll be flipping my flapjacks. Let me be very clear about this. If Bitcoin goes to 200 to 250,000 this year, what do you think's going to happen to the Nasdaq? What do you think's going to happen to the S&P 500? It's going to be a booming year. We're going to be talking about another year where the Nasdaq appreciates 20+%.
Maybe. But my concern, and this is what I keep bringing up all the time, is that I feel like investors got really, really complacent over the last 2 years, where it's just the stock market's gone up, 20% in 24 and 20-ish% in 23. And my concern really is going to be if people have gotten so complacent, so expectant of these giant moves, that when we do have a pullback, are they even going to be ready? Are they going to get their whole accounts wiped out? Are they going to be in Bitcoin and Bitcoin doesn't go to 250 by the end of the year and then they just get wiped out? I don't know. But I would suggest always approach investing from a risk first perspective. What am I willing to risk on this trade, on this investment to find out if it's going to work? Long-term investor, short-term trader, doesn't matter. You need to have that risk level set up before you get into the trade, before you get into the position and say, okay, you know what? I'm going to give this $1. If it doesn't work out, that's okay. I don't need to hold it for 6 months to find out if it is or isn't going to work out. If I give it $1 and it continues on, I can hold it until the trend bends, right? And like I say, don't give me an excuse of, I'm a long-term investor. I'm okay with it being down 30%. Are you really? Are you really? When you could have just gotten out when it went down $1 and then you're good to go. So I really want to preach risk-first investing for sure.
We have another year where the S&P 500 goes up 15 to 25%, right? And people will be like, oh my gosh, we just had 3 back-to-back banger years in the market, right? But remember, 2023 was just, this is what people got to understand about this, right? 2023 was just a get back of what happened in 2022, right? 2022 stock market hammer, 2023 was like, oh, let's get back on track. From there, 2024 was a building year. 2025 could be another building year. No guarantees here, and we got a lot to go through in this video here today, but that's the way you got to kind of frame this. If 2022 was a banger year, and then 23, and then 24, right? I'd be much more concerned about 25, but 23 was just a get back of those 2022 losses. That is what is important to understand about this, and that's a part a lot of people conveniently forget in regards to this whole story. Now, I don't like what I see. Look at GSG. I always tell you guys, keep this on your watch list. GSG Commodity Index.
All right, what is GSG? I've never even heard of GSG, so let's go look at it. GSG. iShares GSCI Commodity Index Trust Fund. Okay. So first thing I notice is it's got an order block right here that has been in fact, let's go back. You're going to love this. So order blocks are the coolest thing for seeing support and resistance. These are large institutional orders that are waiting to be filled. And this is such a great example of how awesome these work, right? So this order block was created in August of 2022. Price goes down, price comes back up, price goes down, price gets into the order block the very first time, rejected. Down for months, comes back into this same order block, rejected a third time, second time, third time, continues on down. A fourth time, rejected, a fifth time, rejected, and then continues on down. And then finally, it looks like this candle is going to close on the opposite side of this order block here. The sixth time that it's tried to approach this order block here, it's going to close over, right? So if you don't have order blocks, this is like a cheat code, in my opinion, to find those support and resistance levels. And it's not something that some random person made up, right? It's just data, and then they plot the data on the chart, right? You can get that on TrendSpider. I've got a coupon code. You don't have to do this, but I would suggest absolutely taking advantage of having that on your chart, because it just makes life super, super easy. But let's see what he has to say about GSG.
Basically, right? It's kind of a basket of commodities, going to tell you what's going on in the commodities cycle. And at the end of the day, everything in this world goes back to commodities, right? You want to make up basically everything, it ends up going back to commodities, right? So I don't like what I see here. And the reason being is GSG is now up about 14.5% in the past year. But specifically, the much more worrying thing is the move in the past, I would say 4 or 5 months, has been rather dramatic for GSG. Specifically, since around the time the Fed made those first rate cuts, right? GSG has been up and up and up. And now we're looking at GSG at the highest point it's been at any point in the past year. And why is this? Well, it's because of crude oil. If you look at crude oil futures, I mean, look at this 12.7% move in the past month. Guys, it's wintertime right now. I'm recording this in January, mid-January. Like, a lot of times you expect crude to move up.
There's your oil move right there on USO. Right? Yeah, breaking to new highs for sure. But again, order block city, right? Came up, kissed it, went back down. Came up, and then it is closing over it right here. But then also on the bottom side, look at this one, right? Every time it hit this area, it bounced. Every single time. This was created in September of 24, once at the end of September, October 18th, October 28th, November 14th, December 9th, and then it finally did something, right? So for me, when I'm looking to trade, there's two things that I want to see, right? If I'm going long, I want to see price going up first. But if it's going up into an order block like this, I won't trade it. I'll skip this one, because it's like, wait a minute, I'm going into overhead resistance. It's like driving your car 70 miles an hour and seeing the wall right there and saying, I'll go through it. It'll be fine. I don't think so. So whenever I'm looking to trade and I see an order block like this, I will skip that trade setup and just move on to the next one. But then again, let's say that you're coming off of some support like this. I would do, right, if I'm going long and I want to see the price moving up already, right? Like, let's say, for example, if I got a signal to enter right here and I see it did just bounce up off of that order block, I'm interested. Now, that'd be 8% to the upside before it reaches this order block. I would take that trade for sure. I don't really have a level where I'd want to see, but generally 2 to 3% at the minimum before hitting this order block is what I would like to see. So let's continue on.
Up in spring, going into summertime, right? Obviously, major driving season, people taking trips, all that, blah, blah, blah. So a lot of people expect crude to move up in spring, move up into summer. But when you got crude moving up huge in December into January, definitely something you got to keep an eye on, and definitely something that could cause potentially problems here, right? What's going on with crude? Crude rallies. Crude and gasoline prices rallied sharply Wednesday, with crude posting a 6-month high and gasoline climbing to a 3 1/4 month high. Wednesday's weaker dollar is bullish for energy prices. Crude prices extended their gains Wednesday after weekly EIA crude inventories fell more than expected to a 2 3/4 year low. This is something to keep an eye on, guys. If I can tell you, if commodities keep running and running and running month after month after month after month, we're going to end up in, guess what? inflation problems again. And that's not going to be fun for any of us to go through, right? Look at this here. What I'm showing, this is out of the government, okay? Real average hourly earnings for production and non-supervisory employees decreased 0.2% from November to December. That's not good. Now, you can't just make a justification based upon 1 month and say, oh boy, we're in trouble here. Because at the end of the day, you look over the past year, and clearly there's a trend of real wages being in a good spot, right? Which we need real wages in a better and better spot so the consumer can go buy a new pair of freaking Nikes, okay? So the consumer can go buy a new iPhone, so the consumer can go buy a new car, so the consumer can go eat at the restaurants, right? That's what you have to have a good economy. You need real wages to continue to come. But recently, if we start talking about real wages going negative again, that will lead to problems in the overall economy, okay? So this is like early indications of like, ooh, and this is part of the reason I believe you're getting a lot of this recent kind of weakness, like unsure market right here recently, is kind of looking at some of the stuff in the market saying, hey, boy, okay, we want to see this. We don't want to see this here, right? Now, if you look at Trump, right? Trump's obviously getting in office in the next few days here. There's some potential tax changes coming, okay? Now, from what I heard, he wants to do something like 100 executive orders or something like that. We'll see what happens, okay?
Dude, I'm telling you, if Trump is able to push through the no federal income tax, first, my question is, how are we going to operate? Do we really think that we're going to be able to get enough tariffs to make it work, right? And then second, won't the tariffs make everything more expensive and bring additional inflation, right? Listen, I voted for Trump. I voted for Trump 3 times now, okay? But what I don't understand is this economic policy. Now, granted, I would love to not pay income taxes, right? Who wouldn't love to pay income taxes? But I don't see how this is going to work out. But if you know, tell me in the chat. I'd love to hear.
But the moral of the story is Trump's talked about cutting corporate income taxes from 21% rate down to 20%, right? Which would be an extra percent for all companies to have versus the government having, right? And he's talked about reducing basically the income tax rate for corporations to 15% if the companies make products in the US. Now, that's going to be a confusing mess because what constitutes making a product in the US? What if you get a bunch of the products from outside the US, but then you technically put it together, okay? So let's say 99% of the products made in China, but all you got to do is just put this one screw together. I made it in the US, right? Or it's made in some other country, and then I put the one screw in. Okay, it was made in the US. This is going to be a complicated thing.
I'm sure they're going to have a rule like 51% of the assembly here in the US or something like that.
To figure out how that works, or if that even happens, okay? I think cutting the corporate tax rate just at 20% might be a lot easier to pull off that, but that's something to keep in mind, right? Now, also, Trump has talked about a universal 20% tariff on all imported goods to the United States and increasing the rate to 60% for imported goods from China, right? Also, talk about...
That does concern me because how much of what we buy is from China? I'm sure the monitors that I'm watching came from China. The camera I'm using came from China. The microphone came from China. And if I have to pay 60% more for all of that, that's going to suck.
Getting rid of the electrical vehicle credit, those sorts of things. So we're going to have likely some, well, if you know Trump, we're going to have some tax policy changes over the next few years, and we're going to have some tariff changes over the next few years. Now, the important thing to understand about this tariff situation, this is another thing that's giving some pause to the market, right? Because the market's looking at this and like, hey, is Trump serious? Is he really going to do a 60% tariff on things that are coming from China, right? Because imagine there's an iPhone made in China and has a 60% tariff on it. So then does that iPhone then go from $1,000 to $1,600? This is something you got to consider, right? And so that's something that gives some pause to the market once again, right? And once again, obviously Apple's outsourcing to India a lot of those products, but you could look at something like a stock that I own, Elf Beauty, right? Elf Beauty's had a lot of kind of malaise around the stock over the last number of months because it's worried about tariffs because a lot of Elf Beauty's products are made in China, right? So, you can say, well, Elf's going to pay the 60% tariff, right? You guys can pay this.
So he brought up Elf. Let's take a look at Elf. Elf has been trending down since July, but it looks like, oh, check this out. Look at this double top right there, right? And then look at this. look at that, and look at this. Look at this. Like, okay, remember when you go to the eye doctor and it's like, is it better number 1 or number 2? Number 1 or number 2? Number 1 or number 2? That is that exactly. That is such a exact representation of that. So now I would say we're down here in the anger, depression, disbelief stage. But we did have this order block created December 9th. And then we just tried to come into it right now. Let's see if we cover it in OVTLYR. We cover over 2,000 stocks in OVTLYR, and we're supposed to have another 500 more here in the next couple weeks. So I'm curious to see what we do cover this one. Okay, cool. So let's look at ELF real quick. I mean, the fear and greed on this continues to be, I mean, look at how deep that fear got right there. Fear value of 43 out of 50. That's super deep fear. So yeah, I would say, and this is going back into fear territory here, but maybe moving back into greed. It looks like it did flatline and come back up. So I would just be cautious if I were an ELF shareholder because it does have 2 overhead order blocks right here. But I mean, you've got some room if it does go up 24%. So that's not so bad. But the trend template shows that it's just barely starting to make a bullish trend back up. I mean, this is a style of trading or investing that I would be into, right? A stock that has sold off for ages, finding its bottom and then starting to trend back up. That I would be interested in, but not until it clears this order block here.
Yes, initially, but that's not the way it works. It always ends up coming back to the consumer, which then leads to, guess what? Inflation, right? So when we talk about the inflation that went out of control in 2021 and 2022, the thing you got to understand, the seeds for that were already in prior to Rona. There was already inflation talk prior to Rona. Rona was a thing that supercharged it, right? And that was what put it overboard. But we already had inflationary problems.
What I remember, call me crazy, but I remember the Fed saying the inflation wasn't high enough before Corona. In fact, let's do this. So CPI report 2019. Trying to find a chart. Hang on, 30 seconds here. Maybe 20 seconds. Yeah, that's what I remember, right? Was inflation was really low. It was under their 2% mandate. So I don't remember people saying, "Oh, inflation's going to be a problem." It's right here. I mean, it's not the clearest chart. Go to this one. That's better. So yeah, right around the 2%, and then 2020 happened. In the middle, we honestly didn't see over 2% inflation until it looks like the just beginning of 2021. So, I mean, his dates are off on that. But yeah, I specifically remember during that time thinking people were making a big deal about how we need to get inflation up leading up into COVID, right? I mean, that's what I remember. Let me know what you remember in the chat. But let's do this. Let's go ahead and rank this video real quick. I would say that of the videos that I've seen Jeremy do, this was the best one. I'm going to give him a 6, a decent right there. I'd have liked to talk more about stocks, but it's definitely not an impressive video to me. It's got a decent amount of information right there. So I would say best one of his that I've seen so far. So do me a favor, in the chat, tell me what you're trading. I'd really actually like to hear it a lot. And come back tomorrow to help you save time, make money, and start winning with less risk together as a team. Have a fantastic day, and we'll talk soon.